Good evening, everybody. We're going to get this going here in a couple of minutes. Just going to give everybody the chance to hop on in. What's going on, Josh? What up, Mike? Nice to see you guys. Welcome in, welcome in. Going on iPhone, welcome. Welcome in, everybody. Interesting day today in markets. Didn't really have too much time to be on the charts today. Was a little bit more active yesterday and be back to it tomorrow again, but nothing really too notable. You got a lot of people freaking out like this is the end of the world, but I mean, it's a complete uptrend in markets still, so I don't really see a reason to be incredibly concerned. It's a little bit funny to see people get so freaked out over these small drawdowns. I mean, this is a complete uptrend. No other way to put it. That could change, and then that's when we start to think a little differently about markets. But until then, not too much to be concerned about from a structure perspective. Breath is getting a little worse, but nothing to really freak out about just yet, at least in terms of the indices. But that's all I'm watching right now. Nothing too crazy. Oh, wow. How are you guys all doing tonight? Everybody feeling well? Getting back into the swing of the things in the new year, hopefully. Busy day. Yeah, I can understand that, Josh. I've had a couple of busy weeks, I feel like. Damn, third day of 75. Jesus. Good to see you too, Shills. Yeah, I don't remember if you sent me some DMs, but I feel like I remember you. Maybe I'm wrong. Yes, I was recently DMing you. Had to think about that. Yeah, caught up on a good chunk of my DMs finally, so that's good. I'm gonna send out one more message letting everybody know we're getting started, and then get right into it. You're missing market hours. Yeah, you just gotta remind yourself that this is what you want to be doing. Um, can't treat trading like a hobby if you want to be serious about it. It's not something that you just do for fun. It's a whole lot more than that. So remind yourself that and get motivated, get your ass out of bed. Um, I can't act like I'm perfect either. I mean, I'm not gonna lie, I was up decently early today and didn't get right to it, but I knew I had some stuff to do early in the morning, so that's my excuse. But yeah, not gonna make any progress if you're not up on the charts. Think of it that way. Live class starting now. Cool. All right, I'll give it one more minute. Anybody have any questions or anything that they have on their mind before we get started, or everybody just ready to get this one moving? Another psychology lesson. Interesting. I will mention that. Cool. I just let Archon know that we want to get one of those on the schedule. So thanks for letting me know that you're looking for a psychology lesson. Have I read Trading in the Zone? I'm actually listening to it. I'm listening to it right now. I mean, I say I'm listening to it right now, but I've kind of been slacking on it. I'll probably actually listen to some more of it tonight, but I've only listened to the first chapter or so. So I need to get back on it and start being a little bit more dedicated with that. But I am listening to it. I like it so far. It's a good book. All right. Couple minutes after the hour, let's get this going. Tonight, well, I'll take a step back. Oh, Flipz. Dude, I was like, oh man, this guy read my mind. Before I started this class, I was like, oh man, I haven't had Flipz in a lecture in a while. It'd be cool if he pulled up tonight. Damn. Flipz, what's going on?
What's good, boss? How are you doing?
I'm good, dude. I just was back in BC for the first time in a couple weeks today listening to you, and man, dude, I'm stoked you pulled up. I'm stoked you pulled up because it's been a while since I've been in class with you. Damn, I'm stoked.
Let's see what we got today.
Yeah. So welcome in everybody. Welcome to the lecture for the evening. Obviously tonight, I'm joined by Flipz. For those of you who don't know myself or Flipz, here we are. I'm sure many of you know Flipz, though it's hard to not know that guy. And tonight we're going to be talking about trading plans. And some of you may be familiar with the term of what this might mean. Some of you might not. Some of you might have seen Flipz talk through some trading plans yesterday and today in BC. I know yesterday, I think Flipz, you were sharing your screen in BC and showing exactly what you were looking for. So some of you might be familiar with the idea. Some of you might have seen what a trading plan might look like for some of us before. And some of you might be brand new to the term and what this even means. So tonight we're going to talk all about trading plans, a little bit about trading rules as well. And the big kind of goal of the evening is to get you guys all in a better position to think about trading more as a system rather than just trading to trade and being in a trade just because and not having any direction. So that's the big idea for the evening. Yeah, we got Flipz in here. I don't know how long he's going to be here, so let's keep this one going. First and foremost, this is again a PowerPoint. Some of you may have seen this one before, some of you may have not. Might be your first time. Just to introduce kind of how I like to do these lectures. Generally, I like to start all my lectures with kind of big idea, get you guys a reason as to why you should be here and why you should be paying attention. And I like to start the lectures generally with a little bit of kind of easier concepts before we move into things that are a bit more detailed. That said, we're going to start this one off with a question, which is why use a trading plan? And this is a question kind of put out to you as the viewers, and also one that I want to talk through, and also one that probably Flipz could talk through as well. I'll keep it short and I'll let Flipz talk a little bit more in detail about his own experience. But in general, when you use a trading plan, and some of you might not know what this is, so I'll define it first. Essentially, a trading plan defines the trades that you are in, and it also defines how you manage your portfolio. So in general, a trading plan might define where you're going to enter, where you're going to exit, why you're going to be entering, what it will take for you to enter, how you're going to manage your portfolio, how much money you'll put into a position, et cetera, et cetera. And I'll probably hand it over to Flipz if you want Flipz to talk a little bit about why you use a trading plan and kind of what that looks like.
Yeah, man, for sure. Trading plan is just developing discipline on what you do on your trades. Number two, position sizing is my biggest one so far. You need to understand that you can hit a home run with $50 and then dollar trade, and you're gonna end up losing more on your port than winning. So, yeah, trading plan is how big is your position size, when are you gonna enter, why are you gonna enter, what are the things that you're looking for. So you need to have a ratio that is a call 4-1 or a 5-1, meaning you have 5 reasons why you can take it and one why you cannot. If you
I
have
love that.
5 and 5, then you cannot enter, because that's a 50-50 trade, and 50-50 is not a good trade for you. So those are some of the things that we look for. I mean, I can give you examples. Winning and a losing one. Winning one yesterday and a losing one today.
Let's talk about it. Let's talk about some of your
Yep.
plans. I like that
Okay,
idea.
so first one was yesterday, QQQ. This
5 minutes.
is 5 minutes. It's just off the bat of my head.
You're good.
Let me see what we got. Qs. Let's throw the 9 to 21 and pre-market high, pre-market lows.
Here, I'll just do this.
Perfect.
Using this as pre-market high or somewhere in here?
No, the top. That right there. Yep.
Oh, I remember this trade. Yeah, I just had to see that level on the chart, and I know exactly what you're doing now. Okay, all right. You want to talk through this
So
one?
I mean, all right. So we had an inside candle on the bottom, which it's a harder level to trade. We saw on the bottom when it's like the first 15 minutes is almost two hammers down there. Yep. So we took some Q calls from the bottom. That was a big paycheck.
Go down here.
And then we see the big consolidation on the top, and we talked about right there. Yep. Then you see, we talked about we're not going to take Q calls on top. We said if Q calls touches pre-market high, we buying calls. And I think it's like the third or fourth candle already. It ended like a hammer, left a little bit more to the left.
This one here.
That one right there. That one, it came all the way to pre-market high, and we sniped. We hold our trading plan. Our plan was if it comes down to support, which is pre-market high, we're going to end up sniping the bottom, meaning you buying a call when it's coming down, the IV 0 pretty much. When it flips on you and it rebounds, you're going to start getting paid right away, especially in same-day contracts. Our stop loss is if it goes below the 9 EMA, which is probably your light yellow one.
Yes.
Yeah.
So let's make this a little more clear here.
Yep.
So entry was here.
Correct. Pre-market high.
Making it really clear.
And your stop loss is if we break below the 9. So our trading plan was a loss of 5 to 10 cents in the down cycles. What we're really looking for is the bounce of a support level. And our target will be probably $1.50 to $2 on the upside. So you're trading 10 cents at the downside for a $2 bounce on the upside, that's a 20-to-1 ratio. And that's exactly what happened. We bought calls, the support of pre-market high right when it was coming down, and he bounced, and we got paid.
Let me fix that a little. There we go. So just to talk through this, Flipz, and we got a couple more people that stopped in once they found out that Flipz was here. Let's talk about this a little bit. So this was a trade that you were waiting for, right? This isn't something that just came to your head, all of a sudden, and you were like, oh, I'm just gonna decide to slap Q calls, right here or something like that.
Correct.
You knew, right? You knew that the market was strong, right? Looking at the context here, very obvious. Market's in an uptrend. We swept through the opening range, or at least this opening range here, not necessarily the Al Brooks opening range. And then you realized price broke above pre-market high, which is this thick green line here, and all of a sudden you just wait for that retest, right? Because the entry doesn't make sense up here. You're buying the top, you're extended from the 9. So wait for that retest of some kind of support in order to take a higher probability and higher quality trade.
Correct.
That's really, and Flipz, that's something that you do so well. And I don't know how often people really realize that's something that you say all the time is you're not going to be buying the top. And what you're really saying by that is your plan is to buy somewhere completely different than what somebody is suggesting you do. And it's so common, I think, for people to see maybe a move take place, such as this move here. And all of a sudden, maybe they see this bar breaks through pre-market high and they're like, okay, well, we just closed our pre-market high. I'm going to buy it.
Yeah.
And that's not how this works, especially when you're day trading and with short-term contracts, right? You buy right here, you're probably barely break even when you get to here, right?
Correct.
And that's, significant. So all that said, and point being that going into a trade with a plan allows you to enter in a much more controlled manner, right? You're not just kind of entering based on your emotions at the top here, where you're thinking, oh, I see prices moving higher. I see we're breaking this level. I'm going to get in without any kind of patience, without any, time spent above that level. You're just getting in just because you see price above there, and that's the end of it, right? There's no thought, and that's ultimately what leads to losses, right? That's ultimately what leads to just terrible trades, right? And entry isn't always the most important part of a trade, right? Usually it's more important how you manage it. However, especially when you're day trading, entries are really, really important, much more important than any other type of trading. And especially the way Flipz trades, if your entry is bad, you're not going to do well. So really nice example there, Flipz. We got a couple questions that came through. One I think is a pretty interesting question. How do you know it will retest? And that's a very interesting question because you don't. You never know what the market's going to do. And if you think you know what the market's going to do, I don't know what to tell you, right? You can have high confidence in some move, right? And, obviously Flipz in VC, you'll hear him, I knew it. And to be fair, the probability was in his favor and he had a good chance of being right. But you never know exactly what could happen in the market. And as a result, you should never assume, especially if you're new, you should never assume that you know exactly what's going to happen. You should never assume that price is going to hold above a level. You should never assume that price is going to retest the level. All you can do is react to what the market does, very simply put. So when you see price break above pre-market high, you should wait to react to any move lower, right? Because you should anticipate, right? It doesn't mean it will happen, but generally speaking, when you have a strong directional move, the first significant move lower is generally one that should be bought, right? Time and time again, you see this happening, right? Even on the same day, right? You get a strong directional move to the downside. The first significant move higher is one that should be sold, right? And it happens to top out at the 9 EMA, right? And it's something that you saw today as well, right? Same idea. We get a significant move higher here into the end of the day. Good chance that first move lower will be one that gets bought. And you can see it struggle a little bit at the 9, struggle a little bit at the 21, but ultimately moved higher. So this one's a little bit less clean. So to answer that question directly, you never know if price will retest. However, if you're Flipz, it doesn't matter. You just wait for it. And if it doesn't come, then you miss the trade. And that's the end of it. Does that make sense? And is that a good way to put words in your mouth, Flipz?
That's exactly what we did, and we talked about it today. If the trade goes without me, it went without me. There's going to be 1,000 trades a day that we can possibly take. So it doesn't matter.
And that's something so important to realize is part of your trading plan, which we're talking about tonight. Every trader is going to trade a little bit differently, right? Some people might trade a little bit more like Flipz. Some people might trade a little bit more like River. Some people might trade a little bit more like myself. Some people might not trade like any of us, and that's fine too. However,
if you think I scalp, imagine River. River scalps for 20 cents.
He scalps harder than you, Flipz, for sure. But he scalps even harder than Tilly. He scalps the hardest anybody in here does right now, honestly. Unless there's somebody I don't know about. But that said, right, every time you take a trade, it should look similar to the trade you took previously and the trade you took before that. The types of trades that you take shouldn't be radically different from each other. And that's all in your trading plan. Within your trading plan, you should be looking for setups that are generally similar, right? That are following a similar system, because it allows you to understand on a very high and detailed level, right? You get both worlds, exactly what you should look for in a high quality setup. And I mean, Flipz is an excellent example of this. He's doing it live every single day. And you go back and look at his past 100 trades, they all probably look pretty similar unless it's, a Hail Mary or something, and he just gets SPX calls because we're at a key level.
I mean, it's the discipline, which is the exactly what you're talking about today. Having a trade plan that's the discipline behind it. The emotion comes after the discipline. You know, the screaming, the hype, everything. That all of that is add-ons to what we trade first. You know, trading plan is key.
100%. And that's, I think, probably a common misconception is, people hear you yell and get excited, which is great. Flipz makes trading fun. It makes voice chat fun for everybody, right? But that doesn't mean that he's just, shaking in his chair, itching to get into a trade, ready to gamble and throw money around. No, he can, feel free to get excited if you have a nice trade, right? But don't let that give you some crazy rush to think that's going to happen every single time, that you can go bigger on the next trade. Flipz is very controlled, and you can tell if you listen to him in voice chat. He's going to have some big trades, but it doesn't mean he's going to YOLO his port just because he had one big trade. And that's something that I think people probably do more often than they should. We got a couple questions, but Flipz did mention something that I want to kind of cover really quick. And that is this graphic right here. This is a graphic that I've shown a lot of times. I think it's really excellent in terms of what it shows, and I want to kind of walk through it just step by step. And it might be a little bit cliche, it might be a little bit corny, but I think it really is important. So this is kind of the trading hierarchy. It's a little pyramid. And let's break this down a little bit. At the top here, you have kind of the least significant part of the pyramid, which is your technical analysis, right? It's picking your entry, picking your exit, and determining a stock to trade. Right. The way I like to explain this and why this is the least important is I truly think that this is the easiest thing to do in trading. Right. I personally think, and I think anybody else with some experience under their belt would feel the same way, that, with a year of practice, a couple months of practice and dedication, I think most people could do technical analysis pretty easily. I don't think that is the difficult part of trading. And I agree with this graphic in that sense. While entries and exits and plans, just based on levels are very important, they're definitely not the most difficult part of trading. So moving on to the next layer of the pyramid is getting into your risk management. Your risk management essentially defines how much money you're going to put into a trade and how you're going to manage that trade. So how much will you sell at your targets? How will you hold runners? What are you going to do when price hits your stop? All those things are so important. And this is much more important than technical analysis because of the fact of just how humans behave, right? As humans, we're always looking to be right. We don't want to lose money. And the problem that presents when we're trading is, number one, we're dealing with an environment that is going to make us wrong decently often. And we're also dealing with an environment where we can lose or make a large amount of money very quickly. So it's really very important to have a set of rules that defines how you should behave in trades in order to actually create that system, create that discipline, so that you're not doing crazy things in every trade, right? Like Flipz mentioned earlier, you can hit a 1,000% banger trade with Flipz and you put $50 in it, right? So you make, 500, whatever, right? Then you throw $500 into the next trade, you lose 20%, right? All of a sudden, you just gave back $100 in profit with a trade that is much larger size than the previous one. And why did you size up, right? There's no reason to be changing your size that drastically. So part of your trading plan, you should be defining how much of your portfolio should go in any trade. I know me personally, I'm never going to put more than 10% of my portfolio in a trade. I think Flipz generally is similar unless you're trading the small port. What's kind of your thoughts on sizing Flipz?
Yeah, I mean max if it's 10% of the port. Unless you have two ports and one is to really try to see how heavy you can push it, and that's different. But if you have only one port, max size is 10%. $1,000 port, you're looking for $100 trades. You don't have to trade the opening bell. You wait for the range of the market to break either up or down, and you look for the next leg up or the next leg down, the next consolidation, either support or resistance to hold or to break, and then that's when you enter with 10% of your trade, with 10% of the port. And what you're looking for is that we've been preaching on VC is 3% a day. If your port goes up 3% a day, compound interest. 3% of $1,000 is $30, but do 3% every single day for 20 times, and you're gonna see that you almost double your port in 1 month. So you just gotta stay consistent.
100% Flipz. And I think one important thing to add on that is 3% a day, excellent goal, right? 3% a day would be amazing, right? You'd be making more than 99.9% of people in financial markets. That said, you can't get caught up on looking for that. Like if you hit a nice trade or two and the market's not looking so great, don't go forcing trades to get, the 3% target, right? Always,
100%. Yeah.
always remember risk is so much more important than anything else in financial markets. You will never hear a professional trader saying, oh, I'm going to try and make 10 grand on this trade. It's no, I'm going to risk 5% of this position on this trade. It's my risk is this. There's not any discussion on, oh yeah, I'm going to try and make $300,000 today. No, that's not what happens. And maybe people say that, and maybe people portray that online, but you'll see a lot of that type of crowd. Finally, at the bottom of the pyramid, we have patience and emotions, which as humans and in trading in general, most people would argue that managing your emotions and managing your thoughts as a human is probably closer to 80% of what matters in trading compared to everything else. And maybe that could be a little bit minimized with risk management broken out separately. But as humans, and I guarantee this is a problem that so many people in this class, actually, let's ask the question. How many people in the class tonight have made a decision in the financial markets because they wanted to make more money or they didn't want to miss out? How many people have done something like that in financial markets? I'm raising my hand right now. I've done that before, right? I made a decision because I wanted to make more money or I didn't want to miss out. 100%. 100%. Everybody's done it. If you say you haven't done it, either you're lying or you haven't been trading for a long time. It's one of the two. So yeah, I'm not surprised. Everybody has made a decision in financial markets strictly because of their emotions, right? Which is fine. We're humans. It's going to happen. I still do it. Flipz probably does it, right? From time to time. All right, Flipz. Enjoy your dinner.
No, I definitely do 100%.
Yeah. So this is something that everybody's done, right? And the problem with that is when you're making decisions based on emotions, you're opening the door to cause significant issues for yourself, right? Because when you're deciding how to risk your money in financial markets only based on emotions, you're opening the door for, the worst things that you can think to happen, right? Going too big in trades, entering trades where you shouldn't be, entering trades that you shouldn't be, right? Letting trades go past your stop loss, not selling at your profit targets, right? When you let emotions take over and you have no plan anymore, you've completely lost what you need to do in trading, what matters in trading, right? So without having your emotions under control, without being patient, you have nothing else in trading, right? Because that defines how you behave in all aspects of financial markets. And it's so important to never forget that. Point being, when you have a trading plan, it should force you to be disciplined because that trading plan should be something that you follow day in and day out. And the trades that you take should be repeatable day in and day out, right? Very important things to be mindful of. Now, we could talk about this all night, why it matters and how to deal with it. One thing that I'm going to add from my own experience, if I take a loss in the market, right, I don't really care. If I lose and I followed my plan and followed my rules, I don't really care. I figure out what went wrong in the trade. What did I miss? How did I not analyze the stock correctly? Did I take a trade I shouldn't have? Did I, miss something? And I move on, right? If I followed my rules, that is a win for me. Any trade that I follow my rules is a win in my book because what that means is I was disciplined. I followed my plan. I had a plan. I didn't over leverage. I cut the trade where I needed to, where it was invalid. I sold if I had to, right? Took profits if I needed to, et cetera, right? So you need to remind yourself that following a set of rules is a win, right? And I can't stress this enough. The best traders and really successful traders in general, every single one of them, if you walked up to them on the street and you asked them, what do you look for in a trade? They could list off everything that they look for in a trade off the top of their head. Boom, right? Most new traders, you ask them what they look for in a trade, I would assume most people would be blank. They'd say, I don't know. When the stock goes up, I'm going to buy it. When the stock goes down, I buy it. Okay. So it doesn't mean anything, right? That's not repeatable. That's not back tested, right? There's no extra probability that you're going to be right, right? There's no statistics backing that type of strategy, right? So I can't stress this enough. This lecture is a concept that encapsulates so many important aspects of trading that so many people fail to grasp early in their trading careers. They don't hear this type of information and they don't act on it. So all of you are here listening to the things that matter, and you all need to act on it as well. Because again, I guarantee you, if you leave this lecture, you continue trading the way you are, willy-nilly, doing whatever you want, no risk management, no trading plans, I guarantee you, you will not be successful. I guarantee you. And if you are, come back to me and let me know, and I'll take you out to lunch or something. But I guarantee you, if you do not make changes in your trading, and you know you need to after hearing this lecture, it's not going to work for you. I can guarantee you that. And that's not to be negative in any way. Just putting that out there, because I was in those shoes at one point. I was in a point where I didn't know any of this. I didn't manage my risk, right? I'd throw as much money as I want in any position. Doesn't matter, right? I'll FOMO into anything, right? I don't care, right? I've been there before, right? I've been there. So next slide, again, this one's pretty corny. I kind of hate this slide, and I've probably said that a couple of times in lectures before, but planning your trades truly allows you to minimize your emotions and maximize success in financial markets. And we have so many examples of what trading plans look like in the Discord alone, just as resources. And I want to just highlight what that might look like very quickly. Oops, my screen is, whoa, what's going on here? So I want to just highlight that really quickly. I talk a lot about different trade ideas all the time, and it can be very simple, right? It doesn't need to be anything incredibly complicated, right? It's, for example, looking on the Qs, looking for the 395 level to hold, that means I'm going to remain bullish. Looking for this uptrend to hold, I'm going to remain bullish, right? So when I'm looking at the indices, it's mainly more of a sentiment type of idea, right? If I'm looking for a breakout over, that's a typo, over one price level, I'm looking for this target, and this is where I'm going to enter. Simple, right? It doesn't need to be anything complicated. But the types of trades that you do take, again, should be repeatable. They should have sound logic and reasoning as to why you should be in that trade. And this shouldn't be something silly, right? You shouldn't have a reason. One of your reasons to be in a trade shouldn't be because you saw on some Reddit forum that they're going to do something. What? Useless, right? No point, right? All of the reasons that you are in a trade should be concrete. They should be something that other people might be able to see, right? It's not something that's in your head or imaginary. So for example, as Flipz mentioned earlier, and this is something that I learned from Shark a couple years ago at this point, every time you take a trade, you should have 5 reasons you're going to be right, 1 reason you're going to be wrong. So let's talk about that for a little bit, right? For example, let's say I'm looking to get long on NVIDIA, right? Let's just say that for an example. And I'm watching this 502.5 level, right? I see that we break this 502.5 level on the highest volume that we've seen in a significant amount of time. Reason 1, volume back breakout. Number 2, I see on NVIDIA multiple time frames are in a strong uptrend. Weekly, daily, hourly, we're all in an uptrend at the time of this breakout. Reason number 2. Number 3, relative strength in this name has been present all last year and the year before. Fundamentally strong name. Reason number 3, it's in a sector that has significant relative strength that is also breaking out and following the market higher at the same time. That could be reason number 4. On the daily, the 9 EMA is above the 21. EMAs are positive in an uptrend. We're trading above all simple moving averages, 20, 50, and 200. Looking at the volume profile, no significant levels of resistance above 502.50. All that to say, right, I have more than 5 reasons why this trade should go well. And anybody can look back at this chart in hindsight and say, oh yeah, this could have gone well for you, right? Obviously it went well. Price is 10% higher than what it was when it broke out, right? So anybody can look back at any chart and say, oh yeah, look at all these reasons you would have been right. So that's not the point. The point is any high quality trade, which NVIDIA clearly was at this point in time, you should be able to recite off the top of your head multiple reasons you're going to be right. One thing that might be interesting to some, though, is that I also included one reason, or I didn't say it, but you should be thinking about one reason you might be wrong. The reason you should be considering a reason why the trade may not go your way is because it allows you to think and realize you might not be right. The market is a game of probabilities, right? You're not always going to be right, and you shouldn't always be right. It's just not possible. There's going to be days where you take a loss. There's going to be trades you take a loss on. It's completely normal. As a result, you should be considering why you might be wrong. For NVIDIA, maybe you could say price is overextended, right? You haven't had any significant pullback. I mean, that's not really true, but maybe you could say that, right? That could be a reason you might be wrong. I don't know, right? Things to think about. It allows you to realize, okay, somebody else might be taking the opposite trade of me. You have to remember, every time you buy in the market, that's because somebody sold to you. The market's a zero-sum game. So there's always somebody doing the exact opposite of you, and you have to consider that. Well, why is somebody doing that, right? Because it allows you, if price does make it to your stop loss where your trade is no longer valid, you can safely cut it and say, okay, I was already thinking about this. I was already realizing that, hey, this might be a possibility. That's it. We got a question here that's pretty relevant to this. Wiz says he tends to trade too fast and always gets into trades without thinking of 5 reasons you should be right. How should you overcome this? Should you sit on your hands and look for setups that are coming? 2 ways to overcome this. 2 ways was number 1 is planning trades outside of market hours. And this is the key. Most of the money is made when the market is closed. That's when, in my opinion, you truly set yourself up to make money in financial markets. Not when the market's moving and you're clicking buttons, but rather when the market is not moving and closed and you're reviewing charts and looking at where things are trading. That's where money's made. And you'll notice Flipz, and I keep referencing Flipz because I know a lot of you guys interact with him on a daily basis, as opposed to myself, who's more swing trading focused. Flipz is in VC every day, and sometimes he'll review his plans before the market's even open. He's already looked in the market for hours and planned exactly what he's looking for the day, right? Maybe today it's Meta, maybe today it's Tesla, NVIDIA, right? He knows what his number 1 setup is. He knows the highest probability setup for the day. He knows what he likes the best before the market even opens. So that's number 1, is preparing when the market is closed. Because if you're scrambling, market's open, you get out of bed at 6:30, you're like, oh, what do I do? What do I do? Okay, we broke pre-market low. All right, I'm gonna short it. It's like you got to be thinking a little bit more than that, right? You can't just be mindless. You got to be prepared for the day. You got to have levels going into the day. You have to understand names that you're looking for. And one rule, if you guys have problems with this, put a sticky note on your monitor and say no trades if it's not planned. Do not take the trade if you did not plan it in advance. Put that on your monitor and look at it every day before you start trading. That's one way to really internalize your rules. And that's something that I've had to do multiple times in the past. One of the sticky notes that I've had on my monitor in the past, and this is something that Shark told me to do, is it was just swing the bat. That was the sticky note. And I just wasn't executing. I would plan trades, but I wouldn't do anything about them. I wouldn't buy for some reason. I just wouldn't. I was just too scared. I don't know. So I put the sticky note on my monitor, swing the bat. And you'll be damned right. When I look at that every morning, I was swinging the bat, and I actually got to the point where I was swinging it a little too much. So I had to dial that back a bit. But that said, right, I think that's a really, maybe obvious, but good tool to remind yourself of the ways that you need to trade is we're putting a reminder on your monitor. Look at it every morning before you trade. Good question. Cool. Anybody have any questions so far? How are we all feeling? I know we've talked a lot about kind of the significance of trade plans, why they matter. Swing the bat. Yeah, there we go. Well, what's your guys' thoughts? How's everybody feeling so far? Are you guys understanding why this matters? Is it making sense why we have lectures on this type of stuff? Right? Having a trade plan, going into the market with an understanding of what you want to trade and how you want to trade it dramatically changes your performance dramatically. I mean, you can see it. Every single trader who's, I'll call it, employed by OOT, every single one of us does the same thing, right? Every single one of us plans our trade before we enter it. And whether you think we're successful or not, that's up to interpretation, I guess. We're not the best, maybe, but we're pretty good. That said, right, we do pretty well. And planning is a huge part of that, right? Think about it in your personal life. Things usually go much better when you plan them before, right? And some people are maybe a little different. Some people are a little bit more agile. But generally speaking, when you have an idea of how you want to do something before you do it, it usually goes a bit better, right? Usually goes a bit better. If you wanted to get your whole family together and you got 5 brothers, 6 sisters, 13 cousins, 25 grandchildren, probably go a lot better if you planned it a couple weeks in advance rather than told them the morning of you want to go get brunch, right? Something to think about. Anyway, just another analogy. I always like to throw those out. Big Joe, you feel clarity and comfort that you're not the only one. That is something so important to realize. Is you might think you're the only person that's ever had these problems in your entire life. Nobody's like you. I guarantee you every single problem in the market that you have had, I've had, Flipz has had, Rivers had, Tilio's had, somebody else in this lecture has had 10 times, right? Nothing, no issue that you have in the market is unique. Not to be like degrading or anything, but we're not doing anything that hasn't been done before, right? Everybody's felt this way. Not just you. It's all part of it, right? But the big idea is mitigating the impacts from that and learning early in your trading career that there's ways to deal with how we inherently behave as humans, right? Having that defined set of rules, having a plan before you get into trades is so important, right? Because it allows you to have the structure. For example, if I had the plan to buy NVIDIA over the 502.55, it's pretty damn easy to look at this chart. Oh, 1 second, gotta go back another day. It's pretty damn easy, if I knew this was my plan, to see we have an absolutely massive breakout over 502.55. Even if you don't buy it here, right? You wait for the retest that never comes. Even if you don't buy it here, well, think about the rest of your system, right? If you're trading EMAs, well, the EMAs are positive all day. Here's a nice little consolidation. Oops. Here's some nice consolidation right into the EMAs. Little breakout, move higher. Another consolidation of the EMAs. Breakout, move higher. You missed the breakout again. You wanted to wait for the hourly EMAs. Okay, right? So having a plan and having an understanding of where areas and what matters in different stocks is so important, because I could rattle off to you some of the most important levels in different charts right now. QQQ would be 395, right? Before, I just know because I planned that this week, right? 395 area is massive for the Qs, right? Because it's that very last low that we recently set, 395. We break that, it'd be more difficult to be long, right? I know that off the top of my head. Tesla, 212, right? Massive level here on the weekly. We take a look at this weekly chart. We break that 212. It's a big deal, right? Brings you down to 200 quick. Google, 139.33, exact spot, right? Monthly level, 139.33. I can tell you if we're trading above that level, we're more bullish than bearish, right? You look at how we reacted to that level intraday. I mean, come on, right? So that was not me showing off how well I can memorize levels, but rather the importance of having an understanding of the things that matter on charts. And the only way to do that is to plan when the market is closed, right? Because I knew 4 weeks ago, that this 139.33 level on Google is one of the most important levels on this chart. And I can structure trades off of it all the time, right? All the time. So having charts ready to go, knowing the strongest stocks in the market, understanding what's showing leadership, what's a laggard is so important, because it allows you to have that list in the back of your mind. You know exactly where you need to go for any day. You understand the type of trades that you like to take. You have a system that you trade with. Talking about my system a little bit. I am a volume price action trader. Try to figure that out. When I trade, I'm looking at key levels, support and resistance, the volume profile, which pretty much shows key levels, volume by time, so spikes of volume, unusual volume, anomalies, moving averages, 9 and 21 EMA, 20, 50, and 200 SMA, and that's it. All those things are all part of my strategy. So I know when a stock is trading above the EMAs in a positive trend, 9 above the 21, positive trend ever since this pivot low, trading above key levels, 139.33, which also coincides with a significant volume shelf in the same area. The 9 EMAs acting as support on the daily. EMAs positive on the hourly. Well, not right now. That's awkward. But in general, right, I know exactly what I'm looking for in a chart. Every single time I'm looking for a trade, I can tell you very quickly if this is a high quality setup for me or if it's not. Very quickly, right? And you should be able to do the same. You should be able to look at a chart and say, ooh, I can structure a trade on this. Or, doesn't look great, right? Doesn't look great. Like maybe SMCI looks great for your system, right? We came back, retested a support level, probably came back into some moving averages here. This might look great for some people, and this might look horrible for other people, right? Maybe some people are more concerned about these upside wicks here, where I marked out Norvin's long entry. If Norvin's still in here, here you go, Norvin. That's your long, 357. Nice trade, buddy. Just kidding, he didn't long it there. All right, so that's a big idea. We got a couple questions here. Do I use unusual whales or cheddar flow? If I do, what do I look out for? I use this quant data. It's the same thing as any other flow service. There's nothing really special to it. It's got these alerts that are significant. It's got, flow and other silly stuff. I don't get too concerned about it for the most part. I'm not nearly as involved with the flow as Flipz might be. But I pay attention to it, and I'm conscientious of some kind of unusual prints that come through. But generally speaking, I don't pay attention to it nearly as much as most other people do, or at least Flipz does. Can I repeat the big level on the Qs and SPY I talked before? I got both those levels in my tab here on these charts, but the big level on the Qs was 375, and I actually don't remember the big level on the Q, or 395. The big level on the SPY is going to be this higher low as well, which is the 467 spot. Also, this 470 is really important as well. Do I have the widget for the volume candles pinned? Could you clarify that one a little bit for me, Christina? I'm a little bit unclear on exactly what you're asking there. You're guilty of planning while your contracts are nosediving into oblivion. Yeah, so you're reacting to a bad situation. You think you knew what was going to happen. You realize you had no idea what was going on, and now you're trying to figure it out. So, yeah, Norman, we'll check VRT at the end of the day. Placing buy orders for options on a Webull chart. We might have some videos about that in here. Yeah, let's see. Yeah, take a look at this. I'll send you the link in the chat. We have some videos on executing trades on Webull. All right, Norman, we'll check it out. All right, I want to talk a little bit about position sizing. So I've definitely presented the significance of having a trading plan. I want to just talk very briefly about position sizing and what that means. So a couple ways to consider stop losses before we get into position sizing, and just to emphasize the importance of having a stop loss. Let's say, for example, my position size standard is 10% of my portfolio with no stop loss. So if I have a $5,000 portfolio, every position I take is about $500. So every time I stop out, I lose $500. And, obviously that math doesn't exactly work out, but let's just act like it does. So if I lose 10 of those trades, my portfolio is done, right? Comparatively, if my position size is 10% and I have a 20% stop loss and I use a $500 position size, my stop loss kicks in at $400. And now my risk is defined to $100 every trade. So I'm putting up the same amount of risk, the same amount of leverage. However, my risk is significantly decreasing because of the use of a stop loss. And generally speaking, I don't necessarily use a fixed stop loss such as this. I don't say, oh, the contract has a 20% drawdown, I'm getting out. That's not how I trade. That's not how most people trade. This is just a great way to exemplify the benefits of having a stop loss. When I have a stop loss, it's based on an invalidation level in the chart. So let's say, for example, I bought calls, I don't know, here or something like that. And for some reason, I didn't sell when we got up to here. I would probably say my stop loss is a daily close below this swing low, which in this case would be right here, right? I mean, that would be a pretty horrible trade to not sell when you get all the way up there, but that's the big idea. So it's just would be based on invalidation. Or if I'm taking a trade on this daily close above this key level, my stop loss would be a daily close back below. So if this candle looked something like this, where we had a daily close back below this level, I'd stop out there, right? Because the trade is no longer valid. The idea behind my trade plan, my whole thesis, is looking for a break above a key level. Well, if we can't hold above that key level, what the hell am I in the trade for, right? No reason to be there. So you got to get out of it. Let me fix this. Cool. So obviously, this is not ideal, right? Not ideal. You want to have that stop loss to protect your capital. Finally, when you're building a trade plan, another important part of that is having profit targets, right? Let's say, for example, your profit target is wherever you feel like, and you figure that out after you enter a trade. So for example, when you enter a trade, you sell most of your position when you're up 5% because you feel like it. That's it. That's it. You feel like that's the right idea. And if your feelings guide you wrong, well, you don't really know what the hell happened. You said, oh, well, I don't know what to do. I felt it in my bones. Or your profit targets are defined before you enter a trade and you scale out of positions when it makes sense, right? At logical places, logical areas of resistance, logical areas where we've seen sellers step in the past. And you can justify when it's time to sell because you're not trading based off emotions. You're trading based off of data. You're trading based off a system. So you can feel confident and comfortable knowing that you made the right decision. You're following your system. So out of these two examples, what sounds more reasonable, right? Does it sound more reasonable to determine a profit target when we're in the trade and just based on how we're feeling? Or does it sound more reasonable to define our profit target based on our system, something that's repeatable, something that we can look at any chart and say, yeah, my profit target should be here because of this? What option sounds more reasonable? Number one or number two? What do we think in the chat? You're funny, Norman. If you take it off at 5%, but it runs at 200%, don't you feel worse? Probably. You probably wouldn't feel great about that. But sometimes it happens. But if you had logical profit targets and you were able to understand that you could scale out of a position, you use those logical profit targets to scale out. So that way you're not in a position where you just sell at 5% because you feel like it. You sell it maybe 5% because it makes sense, but you maybe only sell a fraction of the position there. And then you sell at 10% because it makes sense to sell there for whatever reason, right? Maybe we're sitting at a key level. So yes, we're not going to trade like that. So let's talk a little bit about position sizes. This is something that we talked a little bit about with Flipz, and there's a couple different ways to determine how much money you should put in every trade. These are just some general rules. It doesn't mean this is the only way to do this. This is just some general ways to get yourself thinking about this. The reason that you should have a consistent position size is because the example that we talked about earlier. For example, let's say I decide that I want to put on a trade and I want to put $1,000 in this trade and I make 10%. Great, right? I just made 10%. I made $100, right? Let's say I want to take another trade right after that and I decide to put in $2,000 and I lose 10% of that. Well, that's $200. So I've taken two trades and I'm red. And I was 10% green on one, 10% red on the other, but I'm down $100 net, right? And the reasoning behind that is your position sizing is completely inconsistent. There's no reason or rhyme for you to be trading the way you are. You just kind of feel like you want to put more money into some trades and less into others. There's no reason to be doing that, right? You're just making things harder for yourself. So you have to be consistent when sizing into positions. You have to have a reason for putting the amount of money that you are into positions, because it just doesn't work when you're all over the place. You could be right 10 out of 9 or 9 out of 10 trades and be red just because of your silly position sizing. Let's say, for example, you have 9 trades with $1,000, you make 10% on every trade. So you're up 900 bucks. Then on the very last trade, you say, oh, I just made 900 bucks. So let's go ahead and put in $2,000. And you take a 50% loss, and all of a sudden you're down $1,000. And you sized up for no reason. Doesn't make any sense. Dallas has a good question. Do I size up on trades I've been watching for a while or looks better than others? Yes. I will go with a full position, 10% of my portfolio, on trades that are A+ setups, high quality setups for my system, and I'm entering at a great point. I will take a half position, a little bit less, when part of my plan includes adding more later if price ends up going lower, because we never know if price is going to go lower or higher necessarily. So sometimes we might want to build in that if we're entering maybe a little higher than we think we should. Finally, if I'm taking a position that's kind of a lotto ticket, it's a scratch off. It's like when Flipz says a Hail Mary. You'll hear him say, I'm taking one contract, and he's going to call it a Hail Mary because it's generally a dumb trade, right? It's generally not a great idea. And it seems like most of those trades end up working out for Flipz anyway, but it's a lot riskier than any other trade, right? The risk is much higher because maybe the contract you're trading, maybe the reason that you're taking the trade makes little sense. So there's going to be times where you want to go even smaller. Potentially, Norman. I have to have a little bit more clarity on exactly what you mean, but yeah, I think that's the right idea. So here's a couple examples for sizing for different sizes of portfolios. This doesn't mean that this is how you need to trade. This is just some examples. Whatever you do, you should be sticking to a system. So if I'm trading with $25,000, I should be trading with the same amount of that portfolio or have a reason to change that sizing every single time. So if I'm only using 10% of my port, I shouldn't have more than 2,500 in a position at any time. If I'm using 5% of my port for a full position, I shouldn't have more than 1.25 thousand, right? Things to consider. So to close this out, the big idea behind this lecture and the point of all of us being here tonight, this kind of sounds like a cold, the way I'm presenting this. Big idea, and the things that matter the most from this lecture is planning in financial markets is so key. We have no control, right? People like you and I, we have zero influence. We mean nothing to the stock market. You guys mean a lot to me, but collectively, we mean absolutely nothing to financial markets. So anything we can do to give ourselves more structure, to give ourselves a higher probability of winning is so invaluable. So things that we can do, again, planning outside of the markets and being able to define a set of things that we look for in every trade in order for us to say, yes, I want to trade that. Whether it's a break above a level, whether it's EMAs in a positive trend, whether it's some algorithm that you develop that you think is amazing, whatever, right? Having multiple reasons why you will be right on any given trade before you enter it. Number one, right? Having that plan built out. Number two, knowing where you will enter and sell any position you get into. So where will I even buy this high quality trade that I've found? Where will I sell it, right? Number three, having a set of rules that defines how you trade. So for example, I have a couple of rules for myself. My most important rule is I will never take more than 3 losses in a day. So if I take 3 losses, I stop, right? Having a set of rules, whatever that looks like for you, right? If you find yourself chasing trades or if you find yourself getting into trades without plans, make that a rule, right? No entering a trade without a plan. And the most important thing to take from this lecture of all is everything that we talked about tonight means nothing if you don't listen to it. If you don't listen to your plan, if you don't make yourself set plans for yourself, if you don't obey the rules that you create for yourself, it's your fault. You have to be the one that makes the change, because nobody is going to be the one that says you have to trade like this. I'm not going to be sitting behind you at the desk and slap you when you don't obey, right? Not going to be me. Not going to be anybody else. It's all within you. So you have to be disciplined. You have to be dedicated. And man, I don't know why, but the way I'm talking, I'm like kind of hearing myself, and I really feel like this is sounding like some kind of initiation, some kind of cult. I swear it's not. Man, it sounds weird. Anyway, you have to be disciplined, right? You set all these rules for yourself. They mean nothing if you don't listen to them. You're ready to be initiated. You are now. Everybody's initiated. But seriously, right? Seriously, this is not, I don't know why this sounds so weird to me. And sometimes when I give these lectures, I get all excited and I don't know. I promise you all though, you go talk to any successful trader, they'll all tell you the same thing, right? Have to be disciplined. You have to have a set of rules for yourself, and you have to have a set of criteria that defines when you should be trading and when you shouldn't. That's it. So after this lecture, clearly we've left a lot of kind of things open in the air, right? I'm sure you have a lot of questions like, where do I go from here? Where do I go to get my branding for this new Colt? Where do I go to get the Kool-Aid that's spiked, right? I have those questions too. No, on a more serious note, you probably have questions like, well, how do I even start figuring out how I should trade? How do I even figure out how to set rules for myself, right? Reach out to the team here. Every single one of us has been through that same journey. While we may not be able to tell you the best way to trade for you, we can 100% point you in the right direction. Also, on your own, you can study how people trade, right? Listen to Flipz in the morning, listen to how he day trades, chart out the things that he is trading and pay attention and ask him questions. Why are you doing that? Why do you want to enter there, right? Ask me questions. Well, why do you like that trade more than another one? Ask River questions. Well, why are you trading above the opening range here, right? Learn about how other people pay attention to financial markets, right? Reach out, be annoying, right? It's not annoying. You might think it is, but ask all the questions you can. That's a great place to start, right? That's the big idea of this lecture. And yeah, that's all I have. Hope you guys enjoyed. I'm going to stick around, answer a couple questions, and chart VRT for Norvin. Miguel, yes, this will be posted soon. This lecture will be posted. Joe's been honestly on it. This lecture might be posted tonight. If it's not, it'll probably be up tomorrow. Joe's been on it. So thank Joe for getting these lectures up so damn quick. It's the quickest they've ever been posted. So probably tonight. Norvin, can I check VRT? Yes, I will always check your chart at the end of the lecture. Norvin, I like it. I like it. This is one of the better charts you've sent over, actually. It looks a little sketchy, though. Looks like it's got some room to set back up a little. But this is actually one of the better charts that you've asked about. What is this? Services, critical infrastructure technologies and lifecycle services for data centers, communications networks, and commercial and industrial environments. And okay, power management products. So they do products and services. That's new. They're a new company. Oh, they're small market cap. Interesting. Let's see something really quick. What am I looking for? Interesting. Yeah, this is not a bad one, Norvin. Here's how I trade it. Let's make a plan real quick. So reasons it looks good. Massive gap that held open on earnings, right? Clearly a strong stock. This earnings dip quickly got bought, right? Didn't even start a downtrend. Volume patterns, positive, right? Above average volume days are pretty much all buying, except for a couple anomalies here and here. Price is consolidating, so is volume recently. Nice look to it. Key pivot at the swing high, current all-time high, right at that $50 spot. Probably just watch 50, big psychological level. That's going to be more important. That'd be my entry long. Above that, oh, can't do that. I was trying to label this so when we look back at this, we can remember Norman. If I was going to stop out, this one's a hard one because really, let's see. I mean, really, your stop should be below this low, but that's way too wide. So we're going to need to zoom in here. So at entry, long above there. Probably below this little trend, honestly. Yeah. Got a little bit of a key level here in the 48s. I have an intermediate. And here in the 46.50s. I like it, Norman. This is a good pick. That's what I'd be watching. Maybe a dip add here. Maybe an entry above here. How's that other one we did for you? RMBS. Whoa. Dude, Norman, gotta remember these levels printed for you. This one was the long entry on Rambus. That thing printed hard. Even came back for you a bit. Yeah, Norman, it is solid. I don't know what this company does really though, but ooh, really interesting question from Dala. That is not a loaded question. Let's read this one out. So in the Discord, you hear terms such as backtest and hold, break and retest. What is considered sufficient when looking for entries based on these patterns? Do wicks count? Are we looking for closes above? Hope this makes sense. Really excellent question. Very, very nicely said. Let's see if I can find or think of a good example right now. I found one. So looking at Google here, you got one really important level on this chart, 139.33. A couple ways to look at this, right? Here, price broke above this level on the hourly, right? Here, very clearly, we get a candle close above this level. Wick back down into this level to the cent. There is a retest, right? So this is one example of a break and retest. Zooming in a little bit, you can see this a bit more clearly on the 30-minute, right? 2 wicks back down to this level. Taking a look at this on the 5-minute. Here's the idea, right? Oops. This is one example, nice example of a break and retest. Right here, you can see a little bit of a failed breakout back below, come back above, retest twice, come back down, even retest again, right? Really nice example of a break and retest there on the shorter time frames. Again, break above, nice bull bar closing, not quite at its high. Another example of a break and retest is on the exact same chart. Here's your breakout. Bull bar closing near its high. And today, you get that retest, right? And here's what it looked like, right? This is what it looked like on the daily. Here's what that retest looked like on the 5-minute, right? So you'd be paying attention. Let's say, for example, this was your trade plan. You're looking to enter longs on this 139.33 spot, right? Big breakout above this level earlier last week. you'd be looking to see that volume come back into play or price come back into play. Price does come back down to the 139.33 spot. You get above average volume, hammer candle with a long downside tail at this level. Very nice indication of buyers present here. Nice volume as price pushes away from that level. Pretty calm volume throughout this consolidation. Nice volume as buyers push it into the close. Two ways to look at a break and retest. Does that answer your question, Dala? Is that a nice example for you? Or is there something else that you'd like to see? Awesome. Awesome. Yeah, this was a high quality setup. I honestly saw that I was watching Google here and I decided to not take it, which should have swung the damn bat. That was a big mistake, but whatever. One more example. All right, Helmy, you're going to make me dig one up. Why did I decide not to? I was in some Tesla calls and I was like, you know what? I'm already in enough calls. So I held off. That was the big deciding factor for me. That's it. Outside of that, not much of a reason. I mean, I was on my phone. That's an excuse I can give. I try to not trade on my phone. I was at home though, but in hindsight, there's no reason I shouldn't have tried to get long there. I mean, it has everything you should be asking for from a retest, but I didn't do it. It's my fault. I can make excuses all day, but I didn't swing the bat, and that's okay. I'm not too concerned, but obviously regretting it a little bit now. It looks great into tomorrow. All right, Helmy, let me dig up a nice break and retest from the depths here. Maybe one on Tesla. Not a very clean one that I like to exemplify. Oh, you're right, Microsoft. I forgot about Microsoft. Yeah, I would agree here. So let's take a look at this. So, couple different breakouts here to be mindful of. Let's focus on this 384.3 breakout. So, significant level here. This is the prior all-time highs, so always going to matter. Price breaks out above this level. Not a very strong bar here. Not a very strong candle. This is like the breakout bar and the retest in the same one. Generally, this isn't a candle I'd be a buyer of. You know, it worked out, but I mean, I didn't buy it, and I wouldn't generally buy something like this. Here, though, well, technically we got the retest twice. So we got the break above this 384.3 level. Again, not my favorite breakout in the world, but it is one. And you can see what that retest looks like on the lower time frame. So we don't come down to this level to the tick. You can see we're slightly above it there and slightly above it there. But sometimes with support and resistance, you know, trading is an art, not a science. So one thing that Shark told me, and I have a lot of quotes from Shark that I learned from when he was kind of more directly mentoring me, is sometimes when you're trading support and resistance, squint. If you squint, that's a rejection of that level. That's a hold of it. And so is that. Not always going to be perfect. Price isn't always going to come right to the level you want it to. And you got to be mindful of that. A little bit better of a breakout of Microsoft, though. I mean, here's a good example. So this hourly level here, 374.45, is one that I was watching for a while. It was kind of that previous range high. You can see how this level was a significant pivot in the past. Like we were holding around it here, rejecting it here, holding it as support here, rejected it here. It's just not the best level though. I mean, really the better level is this real range high, which is around the 377.2 area. And you can see for this level, we kind of just blew right through it. So it's just important to note, you don't always get the nice retest, right? This was the range high. You break through it with a nice bull bar closing near its high, momentum continues higher, but that's all you get, right? So that's not really a retest of the level that you're looking for. If we look at the moving averages, though, it's still holding above the 9 EMA, which is generally a decent spot to look for a dip buy as well. So case in point, you're not always going to get a retest where you want it. And that's where you have to make the decision, okay, do you want to enter maybe with a half position at some of these intraday moving averages and take the risk that price may come lower? Or do you want to wait for that retest to come? And if it never comes, well, then you miss out, right? So got to find the balance between kind of accepting that and maybe being a bit more aggressive with the entry. It all comes down to kind of the type of trade that you're looking to take, though. Does that answer your question, homie? Is that a good enough example? And Dollar, thanks for calling out Microsoft. That was not a bad idea. I'm trying to think if there's any other ones off the top of my head. Not really too many breakouts in the market right now. Oh, there's one. Maybe. Zim. Maybe. Let's see. Let's just check this out. The swing high right here. Not quite. Anyway. Oh, Disney. Disney's a great example of the retest failing. I mean, Disney, I was actually watching this one for a retest today. I was actually looking to get long on Disney. Great reminder, Joe. I completely forgot about Disney. I was looking for Disney to hold some of these real important levels. We got the daily point of control here and the weekly point of control right here. A real nice breakout yesterday. Price made it above this downtrend on rising volume, right? I mean, bull bar closing near its high. I mean, this was a beautiful setup for a higher. And then today, it knifes through every single one of these levels. And you look at the retest of all of them, there's not a buyer in sight, right? No buyers here. Not a single buyer at this level. Some buyers here, but they're just weak, right? I mean, there's no volume coming in at any of these levels on the buy side. So that's a good way to determine if it's a retest that should be bought, right? Comparing this to Google, it's very different, right? Google, you get almost the highest volume of the whole day when it retests the breakout. And it held nice, right? And moved $2 higher after that. Disney comes back down to the first level to watch for a retest. It doesn't even put in a lower tail with a buy side candle. Daily point of control, no buyers here. Weekly point of control, this is the buying volume you get. Those are your buyers at this retest. So that is not a retest that you should be a buyer of because nobody else is buying it, right? Look at all these sellers here coming into that level. And then when buyers finally get the chance, that's all they do. There's no buyers here, right? So something to be mindful of. I was actually watching. That's a really good one to mention. I was literally watching for a break and retest on this today. Never came. But yesterday, broke above this daily point of control, retested. Broke above this weekly point of control, retested. Almost to the cent of both of them. Not perfect. What time frame do I use for a hold of levels? Good question. The time frames that I use for hold of level vary depending on the type of trade that I take. So for example, if I'm in a swing trade with a couple months of time, like I am on Tesla, I really don't care what happens on the 5-minute. I don't care. Doesn't matter to me. I'm looking for a hold of this 212 on the daily. And so far, 212 is holding on the daily. So I don't really care, right? If it breaks 212 on the daily, I'll probably cut. Simple. If it breaks 218.50, the 200 weekly moving average, I'll probably add some more, right? Simple. I'm not going to be in real big on this trade. It's pretty extended to the downside. It's in a downtrend. So really, I'm kind of catching a knife here, but I want to try it. Got earnings coming up. It's worth a shot. Usually price is trading a lot higher into the report. So want to try it. What are the two studies I'm using? What we're looking at right now is the 9 exponential moving average and the 21 exponential moving average. The other study I'm using is the volume profile. How do I decide I'm going to swing trade? River always says, don't swing. Yes. So the reason River says that is kind of a difference in philosophy between myself and him. On one hand, you have River who scalps all the time, right? Me, I don't scalp at all. My mind doesn't work well as a scalper. I prefer to think slower. I prefer to think with a swing trading mindset where I have more time to react to things, where I have a little bit more significant setups on the longer time frames, where River is fine, buying some calls on a 5-minute candle and selling them in a minute, right? I just don't really think that quick. I don't want to have to make trading decisions that quick. So that's the first thing is swing trading for me. plays into the psychology that I have as a human being, right? It just works better in my mind. Number two, I like swing trading better. I just personally prefer it, right? Number three, I have a lot going on in the day. Some of you might know this, some of you might not, but trading isn't what I do full time, right? Plain and simple. Full time, I work, normal job. And during the day, I can't just sit around and look at charts. I wish I could, maybe in the future when I quit. But for now, I like what I'm doing. I don't do it because I have to. I do it because I want to. It's a nice job. I enjoy it. And as a result, I don't really want to be on scalping and day trading throughout the day. So I swing trade, right? On top of that, I also generally think that the market has been very favorable for swing trading over the past year and a half. Plain and simple. Volatility has been dropping. It's been a little bit more favorable for swing traders. So all that's to say, swing trading works for me. It makes sense for me in a lot of different ways. It might not for you, right? There's a couple bad things about swing trading. It carries an overnight risk, right? I'm not going to lie. I bought my first Tesla call yesterday at the close and it gapped down 3%. So, you know what? It's not always going to go to plan, right? So you have to be able to manage that, right? So I'm not going to go full port Tesla calls, swing them overnight. Terrible idea. I deal with it, right? Price drops. I don't really care though. Still completely valid. Just I'm down 20% now, which is kind of funny, but whatever, right? I'm not concerned about it. I'm trading based on the daily. Daily still looks fine. That wakes you up faster than coffee. Yeah, I saw it this morning and I was like, oh man, that sucks. But the thing is, I'm not panicked about it. I'm not putting myself in a position to lose some crazy amount of money. It's like whatever, right? And I guess I'm kind of blessed because in some ways, a year and a half ago, 2 years ago, I took probably some of the larger losses in the markets that have happened in the server. We've had a couple people take some real big losses before they came with us, but I mean, there's a couple days I had some real big losses trading actually iron condors, really terrible, terrible, terrible trading. And it's a really different feeling to wake up in the morning, be down $10,000 and be able to do nothing about it. So every day I wake up and I'm down, whatever, it doesn't matter, right? I'm not concerned about it. As long as my trade's valid, it's cool, man. I'm relaxed. I'm not going to freak out. There's nothing I can do about it. I'm taking the trade based on what made sense to me. My entry wasn't bad in the bigger picture. It's completely fine. It just didn't work at the end of the day. It's okay, right? These things happen. So that's why I like to swing trade. Does that answer your question, homie? Would I get long on Apple? Apple's just been a weird one recently. It's been one that haven't had much excitement on. Oh, but it does look good today, though. Still holding that double bottom and that 200. Yeah, it does look good. I would have hit it at this 200 daily if I saw it. I missed it again. Yeah, I like it. Actually, I don't hate it. It's got a lot kind of going on with it right now. I wouldn't be super excited to just get right in there. I'd probably wait for price of this 9 to cross back above the 21. Let's see if the 5's above the 13. Yeah. Okay. So we're starting to get into an uptrend here. So I actually would be looking at it long. Let's see. Yeah. So I like it over this 182. 182. I like Apple. It's okay. Not the strongest chart in the market, so you got to be mindful of that. But it's at some real important levels here. I mean, I definitely wouldn't be shorting above this 200 moving average. Yeah, you got no reason to be short right here. So, kind of as a result, yeah, I mean, you may or may not be long on Apple right now. I don't blame you. It's at an amazing technical level. The 200 moving average is a real big deal, right? And clearly it's holding up nice. You got a little bit of buy volume coming in, earnings in a few weeks. I like it. I don't mind it. I'd be out of there probably on a daily close below 180. But outside of that, looks pretty good. I actually might consider trading this tomorrow. But yeah, Apple's just been moving so weird. I don't understand. It's got that whole situation with that Apple Watch thing, those problems it's been dealing with, and that antitrust suit with Epic. It's had a lot of headlines recently, and it's got the Vision Pro coming out in a couple months. So I don't know. I feel like it's been more headline driven than most right now, but yeah. All right, everybody. I think I'm going to call it for the evening. I appreciate you guys all staying this late. I know this lecture ran long. And I want to just say to those of you who are still here, these lectures are absolutely nothing without you guys that attend live. It would be very boring for me to sit around and talk to myself into a recording for an hour and a half. So you guys being in the chat, being active, having great questions makes it so much more fun, so much more engaging for you. And yeah, I really enjoy this stuff. I hope you guys do too. And yeah, I can't wait to see you guys in the next one. And yeah, I'll be trading with you all in the morning. So we'll see what we find. Do I know off the top of my head what tab the TOS tutorial setup is? And unfortunately, I do know exactly where that is. There you go. I'll put the link for you in the chat. And if you can't find it, there's that one. There's using active trader here. And also there is my active trader setup here. There you go. I do know where all that is. All right. Thanks everybody for being here this evening. If you guys have any comments, questions, feedback, let me know. You guys know where to find me. Reach out to me in the DMs. And yeah, see you guys all in the next one. See you guys all tomorrow on the trade floor. Thanks again, everybody, for being here. Really appreciate it. And have a great rest of your evening. Adios, everybody. Always a pleasure.